Hey everyone, it's Kirk here again at Option Alpha. So in this video, I'm going to be doing a completely brand new rebuild of a bot template to scale up the monthly Iron Condor 3K portfolio template to a $30,000 bot. And then I'm going to be turning it on live. So this is going to be day one of this new bot template that I'm going to be running. So I'm going to do the whole bot template here on the video so you guys can see how I modify and adjust and change the existing bot to format and fit kind of this new larger position size that I'm going to be allocating for this template. So we're going to be going through a lot of things here, not only just reviewing what has worked, what hasn't worked, but also changing, modifying what we're going to be doing as we scale up the strategy. So as we take it from a $3,000 strategy, which we've covered in a number of videos, which I'll link to right below this one, and scale it up to a $30,000 starting portfolio. So as always, this is my opinion, my suggestion on doing this. This is just my personal thing that I'm doing. I'm not recommending that you do any of this. You can do some of this, all of this, whatever you want, but do your own thing, consult your own people if you need to. This is just what I'm doing personally. So this is not advice or financial advice or recommendations of any kind for trading. So scaling up this 3K Iron Condor bot to 30,000. So there's a couple key elements to this strategy just as a review. We've kind of covered these before, but just to go back through some of these I think is very important. So number one is ample cash and small position sizes. So I'm still a fan of this, scaling up from the $30,000 or $3,000 starting balance to a $30,000 starting balance. Now, this doesn't really change, just the math is all the same. It's just the numbers are a little bit larger. Ideally, I'd still like to be under 5% risk per symbol. For this one, I'll be targeting roughly 4% risk per symbol because we will be able to trade more symbols. So that should allow us, we can go up to 5% if you want to, but I'm staying at 4% or just like targeting around 4% with some fluctuations. Still going to be doing this one as a market neutral, high probability trades, entering Iron Condors with 65-70% probabilities of success on trade entry. So this is where we can start to kind of flex just maybe a little bit, start to move this down maybe 65%, 70% roughly. We don't have to enter trades at super high probabilities. We can start to try to collect a little bit more premium, try to pull in these wings just a little bit. But again, we'll kind of walk through that as we go. Number three, we're going to be filtering, again, trades for positive expected value, of course, and minimum implied volatility. So we'll do EV $5 or more and IVR 20 or higher. This has been a good change. We made this change a little while ago. I'm not sure exactly how many months ago we made it for the current bot that's running that I'll show you. But I think it's been a good change because we don't want to get into positions where EV is negative for sure, or IVR is super low. So we just kind of have these low level filters to filter them out. The fourth one here is going to be a good one. This is going to be attempt to trade the full basket of ETFs across the uncorrelated sectors and industries that we've been using. So we have been using a watch list of 10 uncorrelated ETFs that we've used for a long time now. And the problem that we ran into with a smaller portfolio with a 3K Iron Condor bot is we could only trade 6 at a time. And so that did kind of hamper us a little bit. So we do rank those by implied volatility rank, which is still the way that we'll do it here. But I'm hoping, and I don't know, but I'm hoping that we can get more allocation into the full breadth of those ETFs. So basically get into all of those symbols, which will get us more uncorrelated exposure. So if we can get into all of those, that would be a good thing. We'll try to do that in this spot as we build it out. So number five, still taking profits early to build consistency and increase win rate. 30% is still our target. We can kind of mess around with that as we want to and as we see things, but I'll show you a hindsight report here in a little bit that shows you what would have happened for all of the positions if we had held it to expiration. Not necessarily different profit targets yet, but if we'd held it to expiration, it's pretty interesting to see that hindsight report for those positions. And eventually so that we can get to a long enough, or so we can live long enough to get to a high trade count. So the challenge has always been with the 3K Iron Condor bot, and I think we've just been broadly lucky with the bot. Early on, we had a big drawdown in it, but since then we've been pretty lucky with the strategy. The challenge is always here is that we just have low trade counts. So you're getting into positions once a month. We'll go through this with some graphics, but you're getting into positions once a month. You don't have enough frequency. You have to let it go for a long time before you get to that high trade count. My hope is that with a $30,000 starting balance, we can spread trades out more and that will allow us to space trades out a little bit better and get into those positions and get our trade count up. So just as a reminder, kind of showing this graph, this is one of my favorite graphs that we created, which I really like because it kind of shows the concept of what we're trying to do here. And so you have potential return here on the left-hand side, and then you have your risk here on the right-hand side. And what you're doing on this graph is you're kind of seeing, where your portfolio potentially might fit into this paradigm here. So you got conservative and moderate and growth and gambling, and then I label insanity. And so if you look at this graph here, just as a reminder, these green areas, this is how much cash you have on hand. And so I'm definitely still in this camp of 50% in cash. I'm a super conservative trader, always have been. That's just me. If you're not, you can start to whittle down the cash positions that you have as you go up. There's probably at some point a law of diminishing returns in this case where you start to take on more and more leverage and you start to increase your position sizes that you have, either quantity or dollar amount. So you go from small position sizes to slightly larger to larger to larger and larger as your cash starts to whittle down. And so the reason that I think this is important is because you just kind of have to figure out where you are on this growth spectrum. I, again, personally am going to be building this spot on the most conservative growth spectrum. That's just who I am. I'm not doing it because of you guys or for anybody else. I just generally am on this spectrum. Okay, so with that out of the way, so let's talk a little bit about position sizing. So I said again earlier that I was going to be focusing on around 4% position size for my trades. So you could say that, and I think in the last one that we did, the Iron Condor 3K portfolio, we kind of were forced into a position size that was north of 5%. 5% for me has always been a good benchmark. It's not the holy grail of position sizing, but it works for a lot of reasons for sequence of risk. But 5% was kind of like the target. And with the last portfolio that we did, we had position sizes, I think in some cases on the high end, they were about 8.3%. And that's because we couldn't start with a $5,000 portfolio. We started with a $3,000 portfolio. So it kind of constrained us a little bit on position sizing. But with this one, because we have a little bit more capital, we can afford to go somewhere in this range. Now, look, if you're going to do a lot more symbols, this would be like the difference here. But if you're going to do a lot more symbols, in my opinion, I wouldn't touch the cash portion of this. I'd still keep about 50% in cash. But what I would do is I would scale down the number of the position sizing per symbol to something significantly less. So if you're taking this idea and you're like, Kirk, you're doing 10 symbols, I want to do, 25 symbols, whatever the case is, then you would scale it down position size per symbol to something less so that each symbol represents less and less. You wouldn't just do 4% for 25 positions because that doesn't work, and you get to 100% allocation, right? So in this case, I'm going to do roughly 4%. If you look at where the allocation balances are, we're going to be just north of this $25,000 line here. So that's going to put us about $1,200 or so. We kind of want to be in this ballpark. So if you're in this ballpark, this is about the position sizing that you're going to be, in is like, $1,000 to $2,500 roughly for position sizing. And that works out pretty well, can give us a lot of leeway to get into more positions. So the reason that we do this, again, just as a reminder, if you're brand new to this, is because of sequence of return risk, which means that if we're trading at about a 70% probability of success, the probability that we have one consecutive loss to just one loss is about 1 in 4, right? For two consecutive losses, it's about 1 in 11. So if you think about this, if we risked 50% of our account on each of these trades, so we did 2 trades, they were 50% of our account on 2 trades, but they were 70% chance of success trades. Well, we've got about a 1 in 11 shot of going bankrupt because we could lose on both of those trades just randomly. Doesn't mean that those is a bad strategy. It's just the sequence of how the returns play out, how the coin flips, right? So this is the reason why position sizing is so small, because you want to get your position size so small that you can withstand, in the really, really odd chance that it happens, 10, 15, 20 consecutive losses in a row. And the probabilities of those happening at 70% is very, very small. It's not 0, but it's very, very small, such that you could probably withstand a monster blow to your portfolio and still keep the lights on and keep trading. So What does this mean for the model portfolio? It means something like this. So if we have our $30,000 model portfolio, we're going to keep 50% cash as $15,000. It's this green thing. You don't do anything with it. You could put it in something if you wanted to put it in something that pays a little bit of interest, but ultimately you just want to have it in cash. That's what I'm going to be doing. In this case, then you do small position sizes for the rest of the chunks. So this would be roughly 4% in SPX iron condors. That would be $1,200 of risk total. So all positions in SPX iron condors would be $1,200 of risk total. This, by the way, is a small change that we made in this one. So in this one, I had originally, or in the last portfolio, we originally had XSP because it was a little bit smaller. But in this case, you could still use XSP if you wanted to. The liquidity is not as great as SPX, but we might want to change it up to SPX. This is going to be like an optional one that you want to do. I don't know if I've actually quite decided on, which one I want to do, just kind of thinking through it here. But if you were to do SPX, you'd probably have to do, you might have to do some less number of positions in SPX just because it is a little bit bigger in size and the spreads are about $5 apart minimum. So you might have to do that. If you got into XSP, you could probably get into a couple more positions. It might spread out a little bit. Liquidity is not as great as SPX, but it's up to you. Anyways, so then what you would do is you would just do the rest of them. I don't think I changed these to all 4%. You would do all 4% for these all the way down for the 5 or for the 10 symbols that we would trade. So you do, SPX, EEM, TLT, XRT, GLD, XLY, or XLU, et cetera, et cetera, et cetera, XOP, all the different symbols. We'll list all those symbols right below in this video, okay? So we're going to do 50% cash. We're going to do position sizings across the board here. And what we're going to do is we're going to now try to chunk all of these position sizings out into more positions. So remember, we're trading iron condors here, right? That's what we're trying to do. We're trying to get this range here. And ultimately what we're trying to do is we're trying to capture a range like this. So this would be our iron condor. The stock is trading here, wherever it's trading. We don't care if the stock goes up or down or sideways or whatever. As long as it generally lands inside of our range, that's what we're after. We don't want these huge breakouts. So the problem with the last type of portfolio, not that you can't do it because we've done it, obviously, it's just you're constrained by capital. If you have a smaller account, of course, you got to make some concessions and do some different things. The problem with doing a smaller portfolio that you just run into naturally, just because of capital, it's not your own fault, it's just naturally, is that you can only get into a certain number of positions per month. And that means you can only get into a certain number of positions per year in those symbols or in any symbols. For example, let's say that we had this smaller portfolio. Let's say it was a 3K portfolio, right? Which is what we had. That meant that we could only essentially get into one position per symbol on an ongoing basis because we were just constrained by capital. We couldn't do it. The numbers don't work out. You can go to those videos and I walk through why that is. So that means that our positions are like this. Like we get into a position here and that position expires here. And then after that position is done, we get into another position and that position expires here. And then we get into another position and that position expires here, et cetera, et cetera, et cetera. The problem with doing this is that what you have is that you have only a few positions each year. Therefore, each position is more important, just naturally, because what you end up doing is you end up, not by any design, you're not trying to do this, but just naturally what happens is you end up having to rely on luck and timing of those positions until enough trades play out. So you have just luck that, did I get lucky that this position goes sideways? Did I get lucky that this position goes sideways? Do I get lucky that this position, that the market goes sideways here, right? And so the few times that you're able to trade during the year are each more and more important. And the analogy I've always used before is that if I gave you one trading opportunity each year, well, then you picking the top or bottom or middle of the market is insanely important because you only got one shot at it, right? So that's what happened with that portfolio is that, and again, I think it generally worked out. We kind of got lucky in a lot of, positions that we had. As our trade count has started to increase, we, kind of neutralized that a little bit, but it requires more, kind of randomness and luck in the early stages to feel like the strategy is a winner. and it's more prone that you're going to give up on the strategy with less entries because each entry is more important. So if you were to look at, kind of an iron butterfly or an iron condor, let's say that these are your short strikes of each of these positions. So these are where the strikes are. Then you only get a few chances to kind of land these in the perfect zone as you are trading. So this is a problem with trading infrequently, is that the less frequent you trade, you're just really focusing and narrowing on these very small strike zones that you have to land the market into. And if you hit them, great. And if you don't, then you feel like the strategy is a failure. It just might not be a strategy. It might be the frequency and the entries that you're using. So here's why this is important, okay? Because as you start trading, and this is a strategy or a research thing that we did a while back, but we basically tested iron condors. I think it was like 30 to 45 day entries, taking them, to positions, okay? But just we tested different sets of data on how these strategies performed if we were targeting a 70% win rate, like we're doing here. And this was very interesting because it shows the evolution of kind of the strategy and the win rate over 100 trades. And you can see different types of scenarios that were run, different kind of, like reruns of the same thing with different data and different times, right? And you can see that in the first 20 or so trades, 20, 40 trades, I mean, this thing is all over the map. So if you look here at this, like your win rate is all over the freaking place like an EKG monitor, right? And that's because it's trying to evaluate, or it's trying to build enough trades such that the probabilities work out over time. And so if you get into a strategy like the 3K Iron Condor portfolio early, right, that front half of the strategy, or, until you get to like 50, 100 trades, could be very volatile. And I'll show you the results of mine in the beginning days too. And it was very volatile. You had lots of movements up and down. And so that's the problem, is that you're just trying to build enough trade momentum with enough trade occurrences to let these things start to kind of smooth out. And even after 100 trades, you still, like this strategy here, whatever this one was run, this kind of scenario here, this one had 60% winners, but you're targeting 70%. So there's a 10% difference here, a 10% delta. Some people look at that and go, oh, the strategy failed. I don't think it failed. It's just you just didn't have enough occurrences. You didn't have enough flips of the coin, enough opportunities. And if you're only trading once a month, how many months does it take you to get to this trade count? It takes a long time, a lot of patience, a lot of persistence. Some people have it, some people don't have it, but it is important, okay? So instead, what I think that this will allow me to do with this portfolio size, so scaling up to the 30,000, is instead of having the one big entry, so one big entry that you just have to do every single month, we're going to split them up into more entries, ideally 5 to 6 entries, if we can get into it and recycle capital a lot more. So what this means is that instead of the one big entry, now what we have is we have all of these smaller entries. So we do a smaller position here, a smaller position here, a smaller position here, a smaller position here, here, etc., all the way along the trajectory of different expirations, right? And so you could say this one might be like 0.5%, this one's 0.5%, or 1%, 1%, 1%, 0.5%, whatever the case is, right? And what you're doing now is you're moving and more efficiently moving with the market as it moves. So you're not placing your flags in the sand and saying, this is my only place, these are my strikes, and these are my strikes for the next month. You're saying, all right, this is a position. You wait a couple days, let the market move, you get into another small position. Then you wait a couple days, you let the market move, get into another small position. And hopefully what you do by doing this is you spread out your strikes. You spread out your strikes so that they create different boundaries around the market. And this is a very different look than, say, this one here, because this one here, your strike zone is only a few places all year. And in this scenario, your strike zone is a lot more opportunity throughout the year, right? You have a lot more opportunity to kind of smooth your P&L curve. And if you just kind of think about it, the average strike zone, maybe, on the short put side, might be something like this, right? As it's kind of moving with the market. On the short call side, your short calls average out to something like this. And so now what you're doing, hopefully, is you're starting to make market direction become less and less important, where you don't have to be right all the time in market direction. You don't have to be perfectly right, and it's got to land perfectly in your strike zone. What you're doing is you're kind of averaging around the market as you go. So that's my goal in doing it. The other thing that it does besides that, where it makes market direction a little bit less important for each individual trade, is that it increases our frequency of trades such that we get to a much higher trade count a little bit faster. So using that same study that we did before, if you look at this one here, this was win rates, again, targeting 70% win rates for these iron condor trades that we studied, 250 trades. You can see still, I mean, the first 100 trades are all over the place. Even 117, 150 trades, there's still a pretty wide window here, call it 20% rounded, of dispersion between, the high and the low. And it's not until you get to these further out ranges, 200, 250 trades, where it starts to really condense and solidify just a little bit more. Here's that same chart again, going out a little bit further now. This is out to 500 trades. You can see all of the strategies are now inside kind of that target window. If you go out to 1,000 trades, now everything is very, very tightly wound inside that window. Again, everything before then seems all over the place. You get out to 2,000 trades now, and you get things that are super, super tight. So our goal as traders is to get to points like this, as many trades as we possibly can, so that the probabilities start to solidify. The strategy feels emotionally like it's starting to, be more consistent, more religious for you, which is good. And I think part of that is going to be doing something like this, where we spread those trades out over time and get into more position sizes as we go, so that we can hit these numbers a little bit more effectively. Okay, so let's take a look at where things are right now. So again, this is the monthly iron condor portfolio. I'm still running it. It's still on. Hasn't made a trade in a little bit, which is okay. Just it's not finding trades in this market environment after volatility, which is what it is. Just as a reminder, this is the second bot that I've done on this one. I've done videos on this before, so you can check out all the videos below here. But this is the second bot only because we had to transition to a different brokerage, because it was originally started on TD Ameritrade, which then got bought by Schwab. So I had to move it to TradeStation. It's been TradeStation ever since. This one will still keep going. I'm not turning off this bot. I still like having this here. It's a good teaching model, example, whatever. It is a live bot that I'm still running. But this one's good. So far, it's still up right now. This particular bot has closed 109 positions, so win rate about 84%. We're taking profits early. Max drawdown on this one is about 22%, so you're definitely going to expect to get a drawdown. I'm sure I'm going to get a drawdown on my $30,000 bot for sure, and it'll inevitably happen probably right after I start this video, and after I start this bot, I'll get an immediate drawdown, because that's typically what happens. But I expect to have that moving forward. What I did though here, I think is pretty interesting, where I selected the two bots from the historical list for analyzing. So I have my current monthly iron condors, and then I have that old bot because I still have it in archive. And so I have all the information on it here. It's only gotten into in the last couple of years, been trading for a number of years now, 215 positions. So if you go back to that kind of chart here, we're about here, like we're about here in this range, where it's starting to feel a little bit more consistent, and it was very, very choppy, and it's starting to feel a little bit more consistent. In fact, if you actually just look at the chart here, you can see that inconsistency early on, where we had just big swings in the strategy. We had, looked like a really good profit, and then got slammed, and then got slammed even further. And then it started to go up, and we had some more slams, and now it's starting to, kind of get a little bit more consistent in its P&L curve, which I think is important. That's what we're trying to do. And that will only come with time that we have right now. So that'll come with time. I fully expect, because I'm going to be starting this $30,000 bot, that, for the next at least year, maybe it will be something like this, where depending on whenever I do a video update on it, which I will, then it could either be high or it could be low. It could be going through a massive drawdown, but I don't think it changes the end result of the strategy that I'll be running. I just know that that's going to happen. I'm going to get a lot of volatility in the P&L as I get started with it. So let's just look through some of these things. I think some of these things are helpful to look at. Win rate, 87%. I think it's a little high. I think we could easily move this down. And it's not that I don't want to win at a high clip, but because we've been entering positions just over 70% probability of success, mainly because it's a small portfolio, like the original one was a 3K portfolio. The goal with the 3K portfolio is really just like capital preservation at its biggest, most important. So we did really high positions probabilities on entry. I think we could meaningfully move this down just a little bit, not necessarily target 70%, but maybe target like 65% probabilities, which might get us entry pops around 68, 67%. It might open up the door and window for us to trade a little bit more premium too, which might help out in these positions as we go. So average risk on these positions so far has been about $166, so we know we can meaningfully adjust that. That's pretty good. Profit factor has still been pretty good. That's a big one that I look at. So this is 151. Essentially means if I put $1 in, I should get $1.51 out, which is okay. Wins, we've got about 188 wins, 27 losses on the books. Average days till expiration of entries about 46. So that should be about the same. I don't think we should meaningfully adjust that. We're still looking for things that are still decently far out. We want to give ourselves time. This time what we're going to be doing is just spreading out that entry over time. So instead of one position that goes all the way out, we're going to be doing multiple positions that go out, further. So that might adjust. It might go down just a little bit because of the average time that we're getting into positions versus once at a time. But it should be okay. Days in trade, 23 days in trade. This is just mostly a factor of the fact that we're taking profits at 30% right now, which means that we're not holding these trades all the way. So roughly 23 days in the trade, we're holding it roughly halfway through. Some we do hold all the way or very close to expiration if they're not profitable, but that would give us, again, those are still factored in here for those days. If we go down here a little bit further, there's a couple things just to look at. Obviously, it's just iron condor, so that's it. Our symbol dispersion is pretty interesting. So we've traded most of the symbols in here. Some of the symbols have been traded more than others just based on implied volatility and which ones had better trading opportunities. I'm hoping we can still trade all of these a little bit more. SPY was actually our worst position, which is interesting. Gold kind of ran away from us. Some of these other ones are just not so typical, like XRT, XBI, TLT were some of our best positions. Pretty interesting. But the mix was pretty good. So hopefully, I don't know, it might change. We'll see how it goes. Okay, this is the really coolest part here that I want to go through, which is the Hindsight report. So we just added this recently, but I think this is a really cool one, which is if you just click the button to create a report, and it creates a report based on these existing positions. So it's the simplest, easiest thing you could do. What it does is it runs a hindsight report, which is basically answering the question, if you were to close these positions early, or if you were to let these positions go to expiration versus closing them early the way that we did, what would have the P&L been for just holding to expiration? And so this kind of shows you good or bad, because it could show you good or bad, if your management that you're currently using is better than doing nothing, then better than letting it go to expiration. So in this case, the actual results here were here, right? The held to expiration results of the same positions. So the same positions, we just ran them to expiration in the analysis that we do on the back end here. It would have resulted in less P&L and a lower win rate. Now, ironically, the win rate would have been just about what we were targeting. 70% would have been the win rate, and that's what we were targeting. We were targeting about 70% on entry. We got a higher win rate mostly because we took profits early, right? And the goal of taking profits early is not always necessarily to make more money, in my opinion. I mean, yes, we should be able to make more money sometimes if you take profits early. But the main goal, and if you go back to some of the original videos I did on this, the main goal for me is to smooth out the P&L curve. So our P&L curve, our actual is kind of the blue. I roughly smoothed it out here, so it's not perfectly smoothed out. But if you look at that compared to the other P&L curve, which is held to expiration, you went through a significantly more volatile curve if you held to expiration. So to me, the goal of this was smoothing out our P&L curve, getting into a more consistent rhythm with trades by taking them off early, recycling capital. I would say that was pretty effective, and we should continue doing that. So could we move that up to 35%, 40%? It's up to you. I'm still keeping 30% right now because it's worked out pretty well for these positions. But again, it's totally up to you how you want to run this. So that's kind of the layout of the different positions and how they've kind of gone here, which I think has been interesting. Our lose streak has only been 2, so that's been good so far. I would expect that it would be more at some point, but but it is what it is, and we'll keep position sizing, small to accommodate for that. So, okay, so next thing that we have to do here is we have to start building out this new bot for our portfolio. So where we're actually going to start is back here, just kind of giving you a high level of kind of the structure of how we're going to do it, because we're going to need to create multiple bots to run these. I think the best way of doing this is to create multiple bots, one for each ticker symbol that you'll be trading. And that's the easiest way to do it because it allows you to really control things really easily instead of having to try and jam everything into one bot. The other thing is that if we try to jam it into one bot, we're going to be constrained by the number of positions we can fit into a bot anyway. So the easiest thing to do is actually to create multiple bots using the same type of bot template, which you can spin up really fast. So just kind of high level, again, let's assume that I am building out a bot portfolio for $30,000. And so what we're going to do is we're first going to create a bot that is designed for this $30,000 portfolio, but is trading SPX. So SPX is going to be that particular bot. It's going to be like SPX 30K portfolio bot, right? Or whatever the case is, however you want to name it. But the bot that we're going to be doing is just going to be trading SPX. It'll be using the type of automation that we needed to use, and we'll modify this from the original Iron Condor portfolio to spread those trades out over time and to kind of space those positions. But the bot itself is just purely going to be trading SPX. And so the reason that we need to do this is because if we're going to try to get into, let's say, 4 to 6 positions in SPX in a given month before we start cycling trades over to, more positions, then we need room for that bot to trade all of these positions. And in our case, if we're trading, let's say $1,200 per position in a ticker symbol like SPX, then that $1,200 that it can be trading, that can be split, in this case, 6 ways, $200 a piece. So we'll get into one position for $200 roughly of risk, another position, roughly $200 of risk, another roughly $200 of risk, another, okay? Again, like that's how we'll kind of split this thing up. If you go back to our position analyzer, you can see that right now our risk on these positions on average was about 166. So we can effectively keep most of this the same and just get into more positions versus the one single position that we had gotten into previously under the 3K portfolio. So once we do that, once we have this bot built out for SPX, then what we can do is just simply clone the bot and switch out the ticker symbol using bot inputs, which now allows it to trade a different ticker symbol, but the same underlying strategy across that ticker symbol. So in this case, we could swap it out to TLT. And then I didn't build all these because there's a lot of graphics to build out for that, but essentially you do the same thing for the other ticker symbols. So you would do just clone the bot, and we're going to do XRT and EEM and GLD and XBI and all these other ticker symbols that we want to trade. So that's essentially what we're going to be doing kind of on the top end of it, okay, kind of structurally. So if you don't already have the Iron Condor template, what you can do is simply go here to the community. We'll give you a link here. You can clone this. I will share this new template into the community so you guys have a copy of that. So it'll be below here. So you don't have to do these steps. I'm just doing these so you can see how it works. But if you wanted to clone the original one, you could do it here. Or in this case, you can use the new template that I'll share into the community once we're done. So here you want to name this something a little bit different. So here I'll name this one SPX. Actually, we'll start here with 30K portfolio of Iron Condors. And we'll just put an amendment, a label here at the end that it's SPX. We'll change this one here to trade station so we can trade this thing live. Now, in the total allocation that you have for all positions, you could probably give this, you could do it one or two different ways. It's totally up to you. In this case, what we're doing here for SPX is we've already allocated, we're going to say that we're going to do $1,200 of allocation for SPX. So you can put $1,200 in here. You know that that already gives you room for your cash. So your cash isn't necessarily allocated to the bot itself. The reason that you could do this, it just makes it a little bit easier just because you know $1,200 for that particular ticker symbol. Now, I don't think that I'm going to do that because if you do it that way, then it kind of might skew your stats a little bit, because you're trading for stat wise, you're effectively trading 100% of your capital for them. So that's not the case. For the case here, because we're doing a bot portfolio that's $30,000, right? And we're dividing that up among 20 tickers or 10 tickers. Each ticker really has $3,000 of capital allocated to it. And then about 50% of that is going to be in cash. So if you want to keep your stats a little bit cleaner, I would say that you would keep your allocation per ticker of $3,000. That will still allow you to only invest half of your allocation for that ticker, about $1,200, $1,500, however it ends up going for that ticker. But just keep your stats a little bit cleaner, a little bit more true to the fact that you've got cash that's just sitting there idle for calculation of return, things like that. So I'm going to keep that at $3,000 for every ticker. Kind of ironic, it's just $3,000, just a 10x distribution here. I'm going to keep all the inputs the same right now for all of these. So you can just clone this one out here. This will kind of be our model working forward that we'll use. So if we go in here now, this is our new setup. Again, this has nothing in here. There's no positions, no log, no history, no nothing. Now we will have to modify, like we talked about, we will have to modify some of these scanner automations. We're going to change up our monitor automation. I'll do that here in a little bit. But first thing I'm going to do here is just go over here to our safeguards. I'm going to change up our safeguards just a little bit here. And what we're going to do here is we're going to change the daily position limit to 1 position per day. And then we're going to keep the position limit in total at 6. Now, I'm going to allow day trading only because the position, the portfolio size in aggregate allows for this. But if you don't need this, or you don't have the ability to do this, you can just block all day trades. I rarely doubt that any of our positions are going to get to 30% profit the same day that we enter them. But you can allow it, you can block it. I'll just allow it in case there's a chance where it does do that. It hasn't before for any of our positions, but it's up to you if you want to allow that. Now, the reason I'm doing this as daily position limit 1 is because I don't want to get into multiple positions in SPX on the same day. If you remember from going back to kind of our chart here that we wanted to distribute the trades out over multiple days. So we wanted to space them, what I typically refer to historically as laddering. That's like kind of the idea. It's like you're climbing rungs of a ladder. You don't just jump from the bottom to the top. You have these little steps that you go through. And so this would be laddering the positions out over time. So I don't want to get into more than 1 position in SPX in a single day, but I will allow at total 6 positions. So this is where you can kind of keep your position sizing and your controls starting to help you out and kind of safeguard your positions. I'll set the scan speed to every 1 minute because it doesn't matter. It can be 15, 5, 1 minute for these, but 1 minute for entries is totally fine. And then here, we don't need to set a symbol, because in this case, the bot symbols that we're using don't apply here. We're going to set them to each individual bot so that we can space out the trades by the bot itself, okay? The last thing that we're going to do, or next thing that we're going to do here is we're going to go here and we're going to adjust and edit this automation scanner that we have here. Now, if I go into this scanner itself, I'm going to be editing that Iron Condor scanner, which I'm using someplace else right now, which I don't want to do. So I don't want to do that right now, because what I want to do instead is I want to create a new version of this. Now, if you hit the new button here, it'll create a brand new automation and you just start from scratch. I don't want to do that either. What I want to do here is I want to create a copy. So if I just open up this tab, and you can do this anywhere, I'm going to create a copy of this automation. It just replicates it, so I don't have to build it all from scratch. I can just modify it. And I can give it a new name. In this case, I'm going to say Iron Condor scanner for, and we'll just say $30,000 portfolio. We'll just be even more specific, single ticker, okay? So that we know what it is. In this case, this automation was built for this original bot to have multiple symbols in one bot because it was easy. We were only doing 1 position per bot. Now that we're expanding it out, we need a bot for every single symbol because it's going to be managing multiple positions in that given symbol. So what we're going to do here is we're going to get rid of this bot symbols loop. So we're going to delete that action. And then we're only going to add 1 decision ahead of this. So we're going to go ahead and precede this decision or this action to open a trade idea. We're going to precede this with a decision. The decision that we want to go down to is inside the bot grouping here, and we want to go down to the decision that allows us to space these trades out over time. So if you go down here a little bit further, it says bot last opened a position with a symbol more than X market days ago. Now you can use probably either of these in here because it ultimately is inside of one bot with one symbol, but it's a little bit more targeted if you wanted to use it here, just in case you add more symbols to the bot. You could do something like that, but you can add this one here, which would be that the bot last opened a position with whatever symbol you're currently trading more than X market days ago. And so again, what that's going to do is it's going to force the bot to only get to the point of the open position action if it has been a certain number of time and since the last position that it opened. So in this case, we can actually create a custom input for this particular symbol. We're going to call this master symbol. And the default value for this one we'll just set as SPX on this one. And then we'll hit save. So that's going to be the master symbol. And then we can set a custom input for this input here, so you don't have to come into the automation and make these changes. We can just put these all at the bot level. And we're going to name this one something like spacing. So we'll say spacing days. So how far out, how many days between entry attempts? Because we don't know if it's going to exactly fill the position here. But this gives us a good idea of how we can space out those trades. So in this case, we'll call it spacing days. We'll set the default here to, let's say 3 market days, let's say 4 market days, maybe something like that. So it will probably get into a position maybe beginning of the week, end of the week, something like that, Thursday, Wednesday, next week. That seems good. Like we want to give it enough time to allow the market to move a little bit, but not too much time that we're just continuously running into the next expiration. So we'll start here with 4 market days and see if we can monitor this as we keep going. Maybe in another video further down as we start getting into trades, we can analyze if it's actually effective to do it that or we need to move it down. So once we do this, we're going to put this here. This is going to be following the yes path. Only on the yes path is where the preceding action is going to go. So again, the bot last opened a position with whatever symbol it's trading more than spacing days ago. If we wanted to modify this to open a new position, you could just modify the title and say something like that if you wanted to do that. And so again, this automation is going to start by asking a question to itself. It's going to ask and make sure the bot last opened a position with the master symbol more than X days ago. Again, these are inputs. We'll move them all to the bot level, so it makes it really easy to replicate these bot templates out. So the next thing that we're going to do here is we're going to go into open a symbol trade idea. This one is currently set up for the symbols that you've been looping through. We're just going to quickly modify this to connect it to the new master symbol input that we've been using. So this is going to be our master symbol input. We already have an input for expiration we're using. We already have an input for position sizing. Same thing for price and exit options. All of that stuff is in here. We can add some tags to this. So I like adding tags like Iron Condor, things like that. If you wanted to add another tag like 30K portfolio or whatever the case is, you can add those in here if you wanted to as well. But I like to keep it pretty simple. Just add tags of different types of things that you want to track if you did. For entry criteria, most of this we're going to keep the same. So bot has enough capital available to enter a position. Of course, we don't want the bot trying to force a position in here. Bot has less than 1 position open with the symbol. No, we want to remove this one. This one here was ensuring that we were only opening positions for a given symbol if we had no existing positions. But because in this case, we do want to have more positions in that symbol, then what we do is we want to remove this. We don't want to do anything there. So make sure that we don't have, it allows the bot to get into multiple positions with that symbol. In this case, we do want to check this one that it doesn't have a position with an identical leg. So whenever possible, we want to make sure that we're not just doubling up on positions or an identical leg or a conflicting leg. So those will be really good ones here to make sure that we're actually spacing the position out over time. and over different strike prices. IV rank, this is going to be our main filter here like we talked about in the beginning. We're going to use a pretty simple bid-ask spread filter of 40 cents. You can modify that if you want to, but that's generally been effective for me. Just making sure that we get into positions where the bid-ask spread isn't crazy, crazy high. Expires before the next ex-dividend date. Again, for this bot template, I don't do anything for FOMC. If you wanted to, you can, but I've always traded through it with the last bot template. We didn't really have this filter in place before, so it wasn't really a thing that you could do. I haven't found that it really is meaningfully hurtful to the bot template to avoid FOMC, so we just trade through it. I think you could too, but again, you make sure you do it your own judgment call. Alpha is greater than $5 or 5%, which is good. Expected value per contract greater than 5. Risk reward ratio, again, minimum 50. Probability of profit greater than 70%. This is where I am going to scale it back just a little bit. I think that this is going to be a good one for us where we scale back the probability of profit to just a little bit. Might allow us to capture a little bit more premium here on these positions, which might help out with entries that we're getting into. Max loss, we're still going to keep at $300. Again, remember, most of the positions anyway were max loss about $166, so still within our about $200 range per position that we're getting into. But this just allows us to go out to $3 wide strikes if we need to. That's going to be really important for these contracts, and definitely allows us for SPX to go out to $250 or $300 for max loss and get those $5 wide strikes if needed. Always for me, I rank positions by alpha. That's just the best way I think to rank positions. And once we're good to go here, we simply hit save. So now what it's doing is it's going to again say, is the bot allowed to open a new position? Yes, based on our spacing. And it's going to open a master symbol trade idea. So whatever trade idea it's in there. We're going to go ahead and save this to our portfolio. We'll add it in here to Kirk's scanners. Actually, you know what? I'm going to put it into my Iron Condor folder that I have. If you want to save it to your library, you can do it here too as well. So I like saving it into a folder called Iron Condors, so I know what it is. Once we hit save here, that's going to be added here to our scheduled. So now we have an Iron Condor scanner for a 30K portfolio. Again, market runs is going to be Monday through Friday. We already have automation inputs that we've moved to the bot level. So you can see we've just slid these inputs over here to the bot level by creating bot level inputs. That controls things inside of the automations really, really easily. The only two that we haven't moved to the bot level yet are these new ones that we created here. So let's just go ahead and move those to the bot level. Those are really easy to do. We're just going to add a bot level input, copy the same stuff over here. You can just move it over just like this. It just creates a copy of everything. Now everything, once I hit save, is going to be right here in the bot level inputs. You'll see it here in 1 second once I hit save. Okay, so there you go. You got your master symbol, you got your spacing days, all the other different things here. If you want to edit these bot level inputs or reorder them, you can just go up here and reorder them. I will reorder them so that you guys makes it hopefully a little bit easier. So we have our spacing days, our master symbol, the expiration range that we're targeting, position sizing, entry pricing, and exit options. So those are all in here. Those are going to be reordered here. Just makes it a little bit easier so you know, okay, basically this is the master set of controls right now for this current bot that we're running. Okay, so the next thing that we want to do here, we've already modified our scanner to a $30,000 scanner. Again, we can change any of these, but we're going to keep everything else essentially the same. We just added the spacing here for different entries. We're still going to do one contract, which keeps it nice and simple. And that allows us to scale out to a number of positions. We'll do 6 positions at once for this bot. We could potentially move this out later on to maybe 7 or 8 positions at a time as it's starting to scale out. But right now, we'll just stick with 6 and make sure we keep our position sizing kind of in check. Okay, so the next thing that we're going to do here is we're going to go in here. We're going to make some changes to the monitor automation that we're running. So currently this bot runs a monitor automation that only checks to see if the position is within 3 days and has a challenged close switch. So this has been one that I've had in here for a while. Some people like to use it. If you want to use it, you can still add it in here or continue to use it in here. I don't necessarily agree with closing positions if they're challenged. I don't turn it on for my bot that I have right now. So you can see inside of my bot, the 3K bot, that we have right now, I've kept this switch off. It stays off for me, so I don't close positions if they're challenged. It's just a cool way to do it if you wanted to do it. So what I'm going to do here is I'm actually going to remove it for this bot. So I know some people are like, why are you removing it for this bot? Because I don't like it anymore, and I think we could add something better. So I'm going to remove it for this bot. And instead, what I'm going to do is I'm going to add an automation. And inside the library that we have, I actually have an automation that I've already built, and I actually created it and shared it in the community a little while ago. I think I did a video on it as well, which is the early assignment risk management bolt-on. And I'm going to add that to this particular bot. So I'm going to run this as a monitor automation. It's just a bolt-on automation that you can run. I'm going to run it as a monitor automation, and I'm going to put the expiration day threshold a little bit closer. So in this case, I'm going to move it to 3 market days to run. So I've found before with some of these that I've run that it does get out a little bit too early. If you're a little bit more risk averse to managing assignments, which I'm not necessarily, then you can move it a little bit closer. Or if you're worried about assignments, you move it a little bit further out, like 5 days. You basically get out of the position a little bit earlier. If you want to let it run a little bit closer to expiration, you can move this in, and then everything else I would keep the same. So this would be 3 market days I would move it into. And again, the probability of being in the money for the short leg, 70%, extrinsic value threshold, 10 cents. If that's the case, then it can close the position early. So I'm just simply going to add that automation bolt-on here to the monitor. Now inside of this, again, it goes through a number of different decisions here. You can leave this in here to do this because it's a bolt-on. It's never going to find short put spreads. It's never going to find short call spreads. That's okay. It will just skip through those decisions and go directly down to the iron condors and iron butterflies. And then it's going to evaluate if the position's at risk of assignment, looking at the different legs and short strikes of those positions. It will close those positions if they need to be closed. In this case, you can close those positions early, tag it early assignment risk, whatever the case is for those positions. So I like doing this way. Those are inputs that are in here for just that automation. I don't necessarily think that those need to be added to the bot inputs. If you wanted to move them to bot inputs, you certainly could do that. But in this case, it's just a simple bolt-on strategy that you could add to it that I don't think it's actually going to be effective and useful to do that. So the only one that you might have to modify just a little bit, and it's just ironic we're going through this, is SPX. SPX doesn't have any assignment risk, so I'm going to leave it in here for now. Go ahead and do all the cloning for the other bots that we're going to be running for this. But then you can come back here to SPX and you can just remove this because it doesn't have any assignment risk, so you don't have to do it. You can even modify the exit options for it and remove the 1 day till expiration exit. Again, it's totally up to you, but again, I think it's the easiest way to do it. It's just simplifying the strategy a lot more and using expiration risk management controls versus just a simple challenged exit for the position. Again, for the existing one, I'll keep running the same thing that's in there. You know, the switch is in there if I ever wanted to turn it on. I don't use it right now. I just use exit options to manage everything, but for the sake of this one moving forward, it just makes a lot more sense, I think, to use an early assignment risk management one, especially when we have lots and lots and lots of positions potentially going in different ticker symbols. I will definitely want to make sure that I'm managing early assignment risk and removing positions that haven't worked out so far in the expiration month. Okay, so I think at this point we've got our bot basically set up the way that we want to go for this bot. So the next thing that we can do here is we're going to add it to a bot group to start. This will allow us to add more bots to this bot group. It will consolidate our view on our bot screen. We can also consolidate our metrics across all these bots. It just makes it really easy. Bot groups are super simple to use. We're just going to create a new bot group here. We're going to call it 30K portfolio, if I can spell it, of iron condors. So that is our new bot group name. Insanely long bot group name, but it is what it is. We'll call it, well, how about we simplify it just a little bit to 30K portfolio IC for iron condors. Okay, that makes it a little bit easier. So now what we're going to do is we're simply going to go up here and we're going to clone this bot template. So this is the fun part, I think, about doing this, is that once we have it set up the way that we want it, then all we need to do is simply clone the bot template. So if I go up here and I clone this, I can change up the ticker symbol. We'll do TLT in this case. Remove the word clone. go here to TradeStation, connect it, give it $3,000 like before. Now, all of these inputs here on cloning, these bot level inputs, all of these bot level inputs are now available to modify when you create that clone. And this is what makes it really easy to kind of spin up these new versions, where all you have to do here is just simply change the ticker symbol that you're trading, modify any of these things that you want to modify here if you wanted to. So like TLT, if you want to modify anything, you want to change the spacing of the days or whatever the case is, you could just modify that and then simply hit clone. Now when you do that, you've got a brand new version that's running the same type of scanner, right? Because we've saved this to our automation library. So it's the exact same scanner. It's working exactly the same. It's just using new inputs. Mainly the new input here is TLT, okay? So mainly the new input here is TLT. The only thing you'd have to do here is just switch up your scan speed to every 1 minute, add this thing to a bot group, which is going to be our 30K portfolio, and then we can go through and create another clone. And just do this over and over and over again for all the different symbols that you want to do. So I won't do all of them, but I'll do one more for you so you can see how it works again. Give it $3,000 for that, even though we're going to be spending a lot in cash or sitting a lot in cash. So EEM, and then we'll sit here and do clone. That new bot has been cloned. We'll switch up our scan speed to every minute, and we'll turn that bot into the 30K portfolio bot group so it's ready to go. Okay, so that's what we're doing. We're consistently doing this across the board. So I'm going to quickly pause the video. I'll create and spin up the new bot template or the new bots and be right back. All right, so I spun up all of those different bot templates. They are right here. And you can see I've got all 10 of the different ticker symbols. Each ticker symbol has its own bot that it's going to be running. So again, makes it really easy for me to use the same automations, the same logic, the same things across different bot templates, but it allows these bots to control positions a little bit more because we have more positions that we need to fit into these that just don't fit into a standard bot. Again, think about like 6 positions, potentially in all of these bots across 10. That'd be 60 positions trying to manage those in a bot. Just makes it a lot easier to do it in a single bot with a single ticker. And so again, all of these are just using the master inputs that we have here, where I just switched up this one from, again, SPX or GLD or whatever to EEM and kept all of the different things the same, changed our scan speed to every minute. The safeguards all transferred over as well, so we're good to go there. So then if we go back here, you can see for this bot group that I've kind of selected here, the allocation for all of these bots is 30,000. Again, this is a cool way to do it with bot groups, because if I have this bot group selected, then as I start to see those positions start to move and bots start to get into different things, I can see the total P&L and the return and the risk, etc., for all of the different bots that are selected in that group. So again, it just makes it really easy to do everything with the bot group. So really the last thing I have to do now for this new bot rebuild is turn on all the automations. So I'm just going to simply turn on the automations and start trading all of these live right now, and we'll see where these things go. So I hope you guys enjoyed this very long video going through this, but I know a lot of people have asked for this before, so I want to spend a little bit more time going through kind of the logic, the idea behind it, why I was doing it, etc. I will get a bot template into the community so you guys have access to that. You can spin up your own versions of these. If you have suggestions or modifications or ideas or things I didn't catch or didn't see in here, please let me know. Add a comment right below. Let me know if this helped out, if this didn't help out. It'd be really, really helpful. So if it did help out, give us a thumbs up and a share and a like, and spread the word about what we're trying to do here at Option Alpha. I hope this helps out. Just kind of conceptually thinking about building out a portfolio and how you might do it, and watching me do it with my money and my portfolio here. So I will be back at some point to review how this portfolio is going. Like I said, I fully expect it's going to be volatile for the next 6 months to a year as it starts to build out new positions and get its trade count up. But hopefully after that time, it'll start to stabilize. But at some point, we'll do a video recap and jump back in here and see how this bot is performing with a larger portfolio size. Until next time, happy trading.